Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. These two articles are going to be sharing where silver and gold's prices could be headed. Gold's technicals continue to point downwards. So this article is going to be talking about how gold might be going downwards, but if gold is going downwards, that doesn't mean silver has to necessarily be going downwards as well. This could be the opportunity we've been waiting for silver to start outperforming gold. So, if you do enjoy this video, if you find it educational, informational, or at least just entertaining, make sure to smash that like button. Let's see if this video can get 150 likes. I think we can easily hit that like goal. You guys have been killing it with the likes lately, and I appreciate the heck out of you. So anyways, let's jump into the video. So, last week, we concluded that in the short term, gold's technicals were merely implying weaker prices. This week, despite gold rising Monday, the technical trend is still lower. So the price has stayed below the down-sloping trend line that is pointing to the $1,650 area, which corresponds with the 2/3 speed line, the 38% retrace of the March to April rally, and 28% or 23% FIB trace of August 2019 to April 2020 rally. So the early winter to late summer pattern of gold and TBT, judging by the extended technicals, may be completing earlier than usual. If this is the case, then gold should continue to weaken. And you can see the chart below, looking like we might see a downtrend. Since the beginning of March, gold has correlated positively with overnight repurchase agreements, or repo. Repo levels increased late last week, and gold went higher as per its positive correlation. However, as it did 2 weeks ago, repo has started to turn back down, which implies that gold will follow. Reverse repos are returning to the more normal positive correlation with gold. In reverse repos involve the central banks selling treasury securities with an agreement to repurchase the securities at a later date. The recent spike in reverse repos was part of the response to a shortage of dollars around the world. At least for the time being, the shortage is no longer at a critical level, and reverse repos are decreasing. The positive correlation between gold and reverse repos means gold should also decrease. Gold correlates consistently positive with central banks and dollar swaps, while the TED correlation vacillates that back and forth between positive and negative at high frequencies. The swap line has almost stopped growing, and the TED spread is falling, and its correlation is moving back towards positive. This places a negative bias on gold. Gold generally has a negative correlation with the dollar, considering that the demand for dollars, while not as extreme as was last month, continues at a healthy level. The likelihood of further dollar strength is greater than the opposite. That means the bias in gold should be on the downside. At this point, we are agnostic about the longer-term prospects of gold. However, we are inclined to think that eventually gold could continue higher if the current QE works to save the economy and push it to recovery with a semblance of inflation. The chart below shows how the 10-year treasury rate has increased with each QE and how gold eventually increased as well. Eventually, inflation and the 10-year rate will move above zero, and gold should be higher. So, however, in the short term, the bias in the price of gold is to the downside. So it looks like gold could be headed downwards. And is that bad? Not really. Corrections, sell-offs, dips are healthy for any market, and that doesn't mean that silver will as well. Silver has a different use in the world than gold does. Gold is more pegged to safe haven economy, treasury yields, QE. Silver is more in the industrial world, so silver doesn't necessarily mean it's going to fall. This is where the gold to silver ratio could normalize as silver starts to outperform gold. So now we have the extraordinary bid-ask spreads, and bases are coming down in both gold and silver. The reason may surprise you. Gold is an investment. The price of gold dropped $29 and the price of silver dropped 27 cents. We'll get back to where we think prices are likely to go in a bit. In recent reports, we've looked at the elevated bid-ask spread in gold, though not as nearly elevated as some gold bugs would have you believing, and the elevated gold basis. As an aside, we continue to see articles that get the high gold basis exactly backwards. The blowout in spreads. Below is the graph of the spot price bid-offer spread in both gold and silver. Notice that since April 3rd, the spread in gold is down significantly from its high, though not to pre-2020 levels, normals. Silver appears to have rolled over, but at 4% or 4 cents, its bid-ask spread is still quite elevated. Below is a graph of the gold basis continuous. So as with the bid-ask price, the basis has come back down is almost normal. Here's a graph of the silver basis continuous. Like gold, the basis has come down and has become quite elevated. Like gold, the basis has come down. Unlike gold, the basis is still elevated, though not extraordinary so anymore. So what does this all mean? Dollar supply and demand. We think that it means the Fed's massive asset buying program has had its intended effect. It will have a number of other effects as well. The Fed has bought around $2.5 trillion worth of bonds, grown into balance sheets by 60%. This is the stuff of madness. And, it's really sharing that silver and gold both can move together, right? They can move together or they can move apart. And it depends on what's happening. If you're looking at gold for the near term, then it's probably going to bite you in the butt. But if you look at it towards the long term as a hedge against inflation, as many silver stackers and precious metals enthusiasts do, then it's not so bad. But the thing is people want that instant gratification. They don't have the patience to let the markets just play out. And that's what we're going to talk about in the last part of this video. See, the whole point of me making this video is to share where prices are headed, whether it's long or short term. It should be irrelevant because I'm not planning on selling my silver for the next 10, 15, 20 years anyways. So the 3 to 6 month time frame is irrelevant to me. All that means is I might not be buying as much gold or silver, or I might be buying more gold and silver depending on if the prices are lower or higher. And if gold is starting to look downwards, all this means is it might be an opportunity. It might be an opportunity to buy back in, right? It might be an opportunity to buy back in if you were one of the people that didn't get a chance to buy under $1,700 silver. So when I read these articles, gold is correlated with a lot of things that silver is not correlated to, and that is important to understand. Silver is used in the industrial world. It's the most highly conductive metal for thermal conductivity and electricity. It's used in space equipment, dental alloys, solar panels. It's used in so many things that gold is not used for. See, silver has more of an industrial use, so it's pegged more to the economy. From an economic standpoint, if the economy's hurt, silver is going to be hurt. But if the economy is getting better as the dollar strengthens, silver could in return as well. So the gold to silver ratio was seen as high as 125 to 1. What that means is it takes 125 ounces of silver to equal 1 ounce of gold. Historically, the ratio is around 60 or 70 to 1. So it's extremely inflated. It's exaggerated. It's stretched out. And it has to normalize back down to lower levels sooner than later, right? It has to be sooner than later. So what that shares is that silver either has to appreciate or gold has to depreciate. And most speculators are saying, even the charts that I just went over in these articles, is that gold is going to start depreciating, and that doesn't mean that silver will as well. Silver has opportunity to appreciate. Silver is not correlated to the same things that is gold. So this is the opportunity. Is this the opportunity? I'm going to pass the question to you guys and gals. Do you think that gold dropping is going to allow silver to start rising? And what is that going to look like? We still have a lot of things at play, a lot of things in the economy that could be affecting prices. We only talked about a very small glimpse into the real world of precious metals and what really influences prices. You know, I could keep going on and on about surplus, about U.S.-China trade negotiations, about the FOMC cutting interest rates, about everything, QE, and how the monetary policies can affect everything. But right now we're looking at this, and I'm curious to hear what you have to say. Anyways, though, I'm going to wrap this video up here. If you thought this video was educational, informational, or at least just entertaining, please make sure to smash the like button. Let's see if this video can get 150 likes. Everyone, go like the video right now. If you did want the link to these articles, they will be in the description of the video. I appreciate you guys for tuning in this, especially if you stuck around this long in the video. If you missed the video I posted earlier today, I highly recommend going to check that out as well. Anyways, I'm going to wrap this video up here. This was Silver Slayer. I'll see you guys soon. Peace.